Hey everybody, welcome to Mortgage Today for Friday, July 28th, 2023, and oh, what a day it was. MBS were up 23 basis points bright and earlier this morning, with ECI being a report that Powell increasingly mentions by name, and PCE being the Fed's go-to picture of the inflation index. There was at least something to stake in this morning's numbers, with both coming in just a hair better than forecast. Bonds have managed to hold overnight gains. ECI, Employment Cost Index, came in at 1.0 on a 1.1 forecast, which is down from 1.2 previously. Our core PCE also came in at 0.2 on a 0.2 estimate for month over month. It was 4.1 versus 4.2 for the year over year. Lower energy prices, which fell 19% year over year, pushed down the headline number to 3%, but the excluding food and energy number is still elevated. June 2022 was the peak of the housing market, and that will help push down the monthly numbers going forward. Global bond yields shot higher overnight after the Bank of Japan tweaked the language in its policy statement, which hinted at policy normalization. This caused the yield on the Japanese government bond to shoot higher by 11 basis points from 0.44 to 0.55, which caused global bond yields to spike higher. As a general rule, global government bonds do correlate with each other, so this pushed yields higher. Personal incomes rose 0.3% month over month in June, according to the BEA. Personal consumption rose by 0.5%. PCE price index, which is the Fed's preferred measure of inflation, rose 0.2% month over month and 3% year over year. Excluding food and energy, it rose 2.2% month over month and 4.1% year over year. So it's still twice the target that they want to see it at. Yesterday, the Dow Jones Industrial Average rose for the 13th day in a row. The last time that occurred was on January 20th of 87, almost 40 years ago. Had Dow Jones risen today, it would have been the 11th month in a row that would have been the longest streak since June of 1897. Alas, it declined 0.67%, and the market must now work on a new street. Apartment list showed national rents rose 0.3% in July, now down 0.7% year over year, flat previously. Vacancies increased from 7% to 7.3%. Friday ended up being a slightly stronger session for bonds, but not in an impressive way. Moreover, it wasn't remotely strong enough to undo the damages seen yesterday. The overall takeaway is that it is a strong economic data more than anything that is keeping the upward pressure on rates right now. Things may have looked completely different had we not seen lower jobless claims and higher GDP on Thursday. The other takeaway is that it's not just inflation data that matters. In fact, it's telling that Friday's PCE and ECI data argued for a rally, but bonds mostly lost ground after the data came out. MBS ended the day up 36 basis points at 99.28. So at 99.28, that puts us right back up in this range above that thick green line. And we have a ceiling there at the 25-day moving average, with another ceiling right above it at the 50-day moving average. Next week is another big week for data. It is jobs week. So if jobs continue to hang strong, that's going to lean towards more income growth, which means that people will be able to have more money to spend. We get JOLTS and ISM on Tuesday. Wednesday, we get ADP jobs. Thursday, we get unemployment as well as the ISM numbers, and then non-farm payrolls on Friday. So if you want something that will increase your paycheck and you have control over it, check out our common sponsors, especially our sponsor at WellThatMakesSense.com and our other core sources and influences. Have a great weekend, everybody.